welcome to today's fast video, which is called FOMC, Incoming Economic Data and Mideast War Update. So, what's been going on last 24 hours? I had been updating you over Twitter with the relevant retweets. Unfortunately, my weekend prediction of what is going to be unfolding is quite well on track. We had seen quite a few statements by Trump towards Carlson, towards Tulsi. A lot had been happening as well on the ground when it comes to those counter-strikes between Israel and Iran. But it had been as well about FOMC, rate-cutting expectations, consumer sentiment, retail sales, which had come underwhelming yesterday, and the status of the job market. And you know that I had been quite vocal about the progress of unemployment claims, be these initial or especially continuing ones. And given that tomorrow we have holidays and US markets are closed, we have plenty to look forward for as unemployment data will be released today. So, why this upswing in US dollar that is being a little dialed back today? No, it's not because of the Mideast. This is because of the Fed and how market is reading what is going to be a no cut, and frankly it would be difficult for Powell to explain no cut, just as it had been really difficult to explain in December why he did cut back then actually. So much for the US dollar, and this has been painting the anatomy of one trade which I had talked first right before the 20-year Treasury auction, and this is the one that I had been sticking most with throughout this holiday shortened week, and the one that had been bringing tremendous benefits to clients, and I will be keeping it not publicly available. However, if you compare, which is enough of a clue, if you compare the relative performance of the three leading indices, if you look at financials, if you look at regional banks, if you look at semiconductors, if you look at Nasdaq as such as a whole and compare it to, for example, Nvidia, you have plenty of clues of where could have been and where were those profitable opportunities. I have been featuring market breadth data, which had been kind of mixed yesterday. However, for clients, I had been highlighting the sell the rate bias that I am having, especially going into FOMC. Such was those three charts by clients below on the preceding one, the way they looked yesterday, and you could see that they were kind of holding. However, advanced decline line, advanced decline volume had not at all been painting a convincing picture, to put it mildly. So, such is the current status following yesterday's close, when it became obvious what is going on in Trump's mind and what is going on as regards his future intentions, which direction he is actually pushing. Very meaningful, not just towards Mideast. So here we go with the deterioration in market metrics that I foresaw already yesterday, and the daily picture is quite confirming that. Of course, energy is the outlier, and it ties in well with crude oil coming back to life, as you will see in one of those following charts. and trading signals clients had been enjoying, sorry for the inscription, this is gold, silver and miners chart, which is very strongly leaning towards silver's favor, and this is a sign in itself, and one that I had been vocal not just yesterday about, that silver is very seriously going to play catch up, which is exactly what has happened throughout the month of June. Here we go with oil that is refusing Monday's complacency and is actually basing, pushing higher towards the levels where it closed on Friday, as we were heading into an uneasy weekend where I made a certain prediction, and we are on track unfortunately towards seeing it fulfilled. Thus far it seems. My joint page will help you select what's right for you based on what and how you trade, so make sure to get full access to what I do.